Hello, this is Patrick Barnard in Montreal. It is a Sunday, June 28, 2026. This is the 38th edition of the International Press Review. And a while ago, I made a short little video, the 34th International Press Review, about artificial intelligence. You can look it up if you like, that's its title. Now I'm going to add some notes, and the title of this little piece is AI Fever. I put together these notes on the world press by using all sorts of stuff. You can see the mess that's lying on the rug here. And I want to focus on the fever around AI, which is very palpable. And I want to discuss it in three ways: economic, technological, and social. And I'm going to begin with the economic side of this story by looking at a report of the Bank for International Settlements, the BIS. That is the central bank, if you like, for central banks. It's based in Basel, Switzerland. And its latest economic report for 2026 gave rise to a very important front page story in the Financial Times, London-based newspaper, for the 29th of June, 2026. I'm going to read the headline and the first few paragraphs of this story to you. AI spending spree risks investment bust and threat to global economy. Big tech's AI spending spree risks, the story begins, ending in a prolonged investment bust that could rattle financial markets and damage the global economy, the Bank for International Settlements has warned. The Basel-based organization, which advises the world's central bank, said the prospect of worse-than-expected returns in the tech sector could prompt investors to rapidly curb financing for AI companies at a time when the five biggest hyperscalers are expected to invest more than $1 trillion from 2025 to the end of 2026. Disappointment in returns could trigger a sudden pullback in financing and turn the capital expenditure boom into a protracted investment bust with potential knock-on effects on financial conditions, the BIS said in its annual economic report. Economists are a funny group. They like to speak their own language, which often excludes the ordinary person. This Bank for International Settlements report talks about five hyperscalers that have invested a huge amount of money in artificial intelligence. Now, what does that mean? That's five very, very large U.S. corporations that have invested hugely in AI. Those five are Google, Microsoft, Amazon, Meta, and Oracle. The report from the BIS doesn't mention their names. I'm mentioning their names. Now, the report does, however, point to the fact that this splurge, this exuberance resembles the speculation on railways in the United States in the 19th century and the dot-com madness of not very long ago. And the BIS warns, tellingly, that such booms have often been followed by grave recessions, and that something like this seems to be developing now. It's a warning, of course. $200 billion per year of investment by each of these corporations. That's a huge, huge amount of money. Now, you can have a boom and a bust. We've seen that with railways, we've seen that with the dot-com, and the technological changes still stick around. It's the market that goes up and down. The BIS points out there's a difference today. An awful lot of people now have their money in the market, private citizens, and foreigners have their money in American stock markets. So were a big bust or a recession to happen now, it would have tremendous, tremendous ramifications. Two of the people in the United States really concerned about these ramifications are Robert Reich, a former Secretary of Labor and very well-known commentator and writer, and his colleague Heather Lofthouse. They run a social media platform called The Coffee Klatch. Here they are talking about artificial intelligence and that most important thing, jobs.
The profits of big corporations are soaring. Jobs and wages are going nowhere or going down. This is what we are seeing all over the U.S. economy. This is the story of the U.S. economy under Trump.
How can the stock market be up while everyone is suffering?
Yeah, Wall Street seemed really happy.
Well, I'll tell you exactly why. Because with the advent of, very soon, artificial intelligence, AI is already being installed in many of these companies. They have big contracts for AI. They think that they can get down their payroll costs, and they're already laying off huge numbers of people.
Yep.
And remember, payrolls are 2/3 of the costs of most corporations. So if they can get their payrolls down to 50% as opposed to 66%, what's the rest? The rest is profit. And so you have profits going up. And as profits go up, the stock market goes up. But average working people are losing their jobs.
One of the most important people writing about AI and jobs right now is the commentator Karen Howe. Here she is in conversation with the host of Democracy Now!, Amy Goodman.
This is Democracy Now!, democracynow.org, The War and Peace Report. I'm Amy Goodman. In this holiday special, we continue with the journalist Karen Howe, author of the new book, Empire of AI, Dreams and Nightmares in Sam Altman's OpenAI. She came into our studio in May. She talked about how AI will impact workers.
One of the things that we have seen is this technology is already having a huge impact on jobs. Not necessarily because the technology itself is really capable of replacing jobs, but it is perceived as capable enough that executives are laying off workers. And we need some kind of more guardrails to actually prevent these companies from continuing to try and develop labor automating technologies and try to shift them to producing labor assistive technology.
What Karen Howe means by labor assistive technology is basically AI that is used to complement and help people do their jobs and not take the job away from them. But this is a very real worry for cognitive workers. There's such intense competition in the capitalist economy that is driving this rush to invest because everyone wants to get to artificial general intelligence first, ahead of other people. And they're becoming more and more ambitious. And the ultimate goal, obviously, is to replace human workers on a massive scale. That is making people very angry and rightfully angry. And there's a whole other question that's raised by all of this. With artificial intelligence, technology and social relations are fused together in a very profound way. You're seeing on the screen a story that I picked up from the financial press. It's about the Russians. They shut off their surveillance system for a while. Why? Because they learned from the Iranians that Israeli intelligence had used artificial intelligence, probably large language models, to screen thousands of pictures that they got from inside Iran. And they got those pictures by hacking the very surveillance that the Iranian government was carrying out on its own people. The end product of all of that was the assassination of Ayatollah Khamenei in Iran. Here's another story I noticed about AI. It's about a law firm in the UK, the only one licensed to use AI for law. I think it's unique in the UK and in the world. It's the story of how a woman, a freelancer, sued a client who owed her money. She paid the law firm £400. She got a settlement of £7,000. So that was very good business for her. And all the work was done by artificial intelligence except for the final presentation in court by a barrister. When I began this short little video on AI fever, I was thinking of beginning with this book, Friedrich Engels, The Condition of the Working Class in England. That was a famous book that was published in 1845 in German, later published in English for the English and the Americans. A very, very famous book. It's an Oxford Classics book because it is so important. And why would I connect that with AI? Well, the answer is simple. A number of the very powerful people in AI, and that would include a brilliant chief executive at Meta, have talked about ourselves living through another industrial revolution. Engels sends us a very great warning about what that might mean. And I'll try to explain that very quickly. In his book, Engels begins with the premise that technological change, such things as the spinning jenny and the automated loom, radically overthrew social relations in industrial England. People were pushed out of the countryside. They lost their traditional weaving jobs and the life organized around that, and they were drawn into the factories. And those factories made the capitalists of Britain the richest people in the world. At the same time, the living conditions of the workers were horrible. And there's even something that economists call the Engels pause. And that's a time from roughly 1790 to 1840 when the wages of British workers remained extremely flat. The workers paid a huge price for the wealth created in the society. This is the connection with the age of AI. Engels called what happened to the workers a form of social murder. We must not, in this strange era we are living in, commit social murder now by throwing people, vast numbers of people, out of their jobs. That would be a serious historical crime.